Hi guys, it's Marissa, and it's been a couple of weeks since I checked in with you because I have been taking some time off. I've gone overseas with family for a family holiday, which was beautiful. It was nice to get out of the cold and get some hot weather and just have some R&R. So I'm back refreshed, but lots has happened since I've been away. So I thought I'd check in and just give you a bit of an update. So firstly, the big thing that's happened while I've been away is that Apra has approved the fact that banks can now choose their own assessment rates, which is, of course, the interest rate that banks use to calculate your borrowing capacity. So I think you would have remembered me speaking about this probably a couple of months ago, where Apra were thinking that they were going to loosen their ruling as to what the bank's assessment rates needed to be. Previously, they had set a minimum assessment rate that all the banks had to follow, so there was a lot of consistency across the banks in terms of what the assessment rate calculation was. Now we've seen Apra come out and say to banks that they can actually choose their own assessment rate. What this means is that each bank has the ability to decide within their own risk profile what interest rate they're going to use to calculate your borrowing capacity. So we've already started to see some banks come out to change their assessment rates, which is very exciting news because it means that everyone's borrowing capacity has just increased overnight pretty much. And the interesting thing is that we've already started to see very big variance between some of the banks. So, the assessment rate from bank A to bank B is quite different. What that means is that your mortgage broker now is more important than ever before, because you really need to make sure that you're working with the bank that's going to maximise your borrowing capacity under your individual circumstances. So definitely, if you've been wanting to do something and you've been limited by borrowing capacity recently, then I would encourage you to check in again with your mortgage broker now or over the coming months as the assessment rates change, because your borrowing capacity might now be sufficient to do what you wanted to do. The second thing is, before I left, I ran a Facebook Live on the proposed changes to land tax that have been proposed by the South Australian state government, and I was quite concerned about them, to say the least, as you probably got by my recent videos and Facebook Live that I did with Adrian Cartland from Cartland Law. But I've came back pleasantly surprised to see that there has been a lot of, there's been a lot of backlash about the changes. Obviously, a lot of people share my concerns. And, Liberals obviously, Liberals obviously, the Liberal state government have obviously seen that, people are concerned about this, and it seems like there's been some internal dispute about this. So, watch this space. Hopefully the state government do look to amend or change or tweak their proposed changes to land tax aggregation, and let's just see what happens. So I'll check in with you and give you updates as they arise. But definitely, if this is an issue that you're concerned about, I think that it is a good idea to get out and speak to your politician, your local MP about it, because I think the more people that voice their concerns about what impact it's going to have to their circumstances and their life, the more chances we're going to have to get a good outcome overall. So it's been a big couple of weeks, and it's good to be back, although it is a bit chilly, but at least the sun's shining today for the first part of the day at least. But yeah, I'll try and keep these videos relatively regular, but if there's anything you want to contact me on, you can do that directly. Send me an email or flick me a phone call. You'll find my details on risehigh.com.au. So yeah, I'll speak to you later. Have a great day. Bye.